Okay, so let's have a look at a couple of charts that I did the last 2 weeks. Okay, so what's the date today? The date is 10th of December. It's a Monday here in Singapore. Now these charts are live. Some of them are private for my personal reference. Some of them are live charts, like all these. See, oil, Brent crude oil, Aussie Kiwi, dollar yen. They're all live. December 4th, December 6th. December 6th, December 7th, December 7th, this one December 3rd. So they're all done. They were all done last week. So let's just see how price action has played out so far. As you can see, this is the latest. As we scroll down, then we go back further in time, right? So let's see how many of the charts actually played out. So these are a couple of charts that I made for my personal reference. You see it's on private here, and these are all live charts. So live charts on TradingView cannot be deleted. So right or wrong, come on me, it is what it is. So what we're doing here is forecasting. Let's look at pound yen. All right. So pound yen, basically the arrows tell everything. Basically, it's one move down, correction, one move down. Right. So you click play. The idea is that there must be a move down, and this is exactly what we got. Right. Does that mean that I think it's going to go and break this low? Possible. This is possible. So this looks extremely corrective right now. So I will not take the buy, even though I drew this line. So in order to take this buy, you require more confirmation, right? Maybe it's a one stroke up, one stroke down, or another one wave up, one wave down, another wave up. That is possible. However, you need the confirmation because the larger trend, it is still down, you see. If this happens to be all the correction, this is coming down like 1, 2, this third wave could extend and break this low. So you cannot just buy it up like this. Unless you're some harmonic trader, you just buy at some kind of 270 right here. 270 of this structure, 270 of this. You buy up to here. That's just a reaction trade. There's nothing to do with wave theory at all. Right? Wave theory means that you're looking for one stroke up, one wave up, another wave sideways, another wave upwards. At least some kind of three waves. It could be a 1, 2, 3, 4, 5, it could be a 1, 3, 4, 5, C1. There are a lot of patterns you could make if this goes up, but that requires confirmation. So at this point in time, if you're already in the sell, right, you're supposed to either take profit. As this pullback, you can look to re-enter later if it's coming down, right? Otherwise, the upside requires confirmation. This big move requires confirmation. You just buy it here. You should not buy this thinking that it's going to get up there. You should buy this, exit here. If it makes a correction, then you try to enter again. It means do not confuse the reaction trade with swing trades. People who trade harmonics, that is harmonics by itself, right? If you're trading simply, meaning that some bird trade stuff like that, right? If you're looking for that, and your stop loss is below this level, you should exit right here. Do not keep it thinking that this is going to go up there, because that's not wave theory at all. That's just reaction. So statistically, it's supposed to bounce. That's what you are playing for, a bounce. That is all. Okay, but want to keep it separate. So right now, if you were in a sell, you should have taken some profit because this is potential zone where it can bounce. Because a sell here is not really the best sell, right? You could always retrace. To something like a 382. You know, if I'm going to annotate this, let me just annotate it quickly, right? It could. So let's say you fit from here to here. This could be a 382 right here. 382 right here. You could just retrace that before it continues its way down. So if I was in the sell, I would definitely be thinking of profit here. And I'll think to re-enter later or maybe by Wednesday or so. Okay. So let's look at what happened to the euro-dollar buy. So here my bias was the move you should be looking for is to the upside, right? Reason for that is because this is extremely strong. See all this? Strong. This looks extremely corrective. So at any point, this one can go up. So if you're looking for the down, this is a bad idea. And we'll see what happens, you know. You're always looking for the bigger direction. You need to look for the bigger direction. Once you're up here, you don't want to sell anymore. All right? You don't want to sell anymore. You might hear us say, why don't I look to sell this? Why can't this do that? Maybe, but got to understand that this other direction is very possible as well. Unfortunately, it's a bit ambiguous. The dollar at this point in time, it can go both sides. If let's say you're looking to sell. I can imagine looking for a sell something something like this. You know, some people might be looking to sell something like that for this reaction. If it's just a reaction, that is very fine. I think that's fine because this could come down like this to go up, or it could come down straight down like that, and then it goes down. But whether it comes down like that or whether it comes down like that, you are still going to make this money, and that's fine. You know, whether it comes down like that or whether it comes down like that, right? The reaction will cause this to come down, but whichever way it comes down, you're still going to make that money. The only question is where is this going to go up? Is it going to go down or is this going to continue down? So which side, up or down? And that comes later on. That becomes wave theory. Right? So if you're looking for a sell, this is a good idea, but take the money and go and re-enter later. You win the battle first, take the money, think again later. Okay. Once you have that 4, 5, 6,000 in your bank account, you can look to use that money to trade again later on. Right? So let's go at $1. What did I do here? So the idea for $1 is upside. Let's see whether I was right or wrong. Oh, so I was correct again. So 3 out of 3, right? So strong. This one's pretty standard stuff. And then there's this line over here. See that? So you break anyway, consolidate, you can go. Profit up here. Definitely. How far it goes, nobody knows. You should be trailing, right? If you trade it here or trade it here, because this could have come here, this could have gone up. But it came, then it squeezed, and then it broke. So here you should have been stopped out. If you were trailing, it should have been stopped out. If you were taking profit because it broke the top, you should be stopped out here or here. Right? Either way is fine. Okay. So 1, 2, 3 out of 3. So let's just go back a little bit more. Let's look at oil. Oil is perfect. There's nothing much to say. So exactly this here and then the dotted line. So this was the reaction trade, correction, you buy, enter again here. So first you got this one, then next you got in again. You kept it all the way. That should not be the way to trade because never confuse a reaction trade with a swing trade. This reaction. These are swings. Swings have a 1, 2, 3, maybe a 4 and a 5, or a correction of 1 like that. No, these are swing trades, right? Here, like that bounce is just statistically it is supposed to bounce. Does not have to. It could just come here, and then it just collapse again. You just take the loss and try again, right? But this is perfect. So everything is on point so far. It's pretty insane. So Aussie Kiwi, very long term. Aussie Kiwi, the idea of this is that you don't want to sell it here, because the problem with this kind of trades is they can always do that and then it drops like that. So you would have to endure this drawdown and be in drawdown for quite a long time. So if you're trading this, it has to be on a very, very low time frame. This is a very big picture. This is a weekly. So I'm not looking to trade this at the moment until it comes to the zones that I like. Anywhere below here, around this zone here, at least below this last low, this would be a very good place to look for it. Don't miss this buy if you can get it. You don't have to put in big lots, but you can scale in slowly, because you're looking for it to at least break this top over here. So this one's something that I'm looking at a very long term, probably next year. So let's look at the 6 chart. So everything's be on point so far. It's almost like you got a crystal ball, You can trade like that. You should be doing extremely well in life. Very few people I know can actually do such things. Seriously. Dollar yen down, still down. The demand. The idea is for this. Look, this is very similar to the Aussie Kiwi. I don't want people to sell this one at the Aussie Kiwi because why? This stuff could happen, right? You saw it here. This stuff could happen. So you cannot sell it just because it looks strong, right? You don't want to sell it. A pullback, you sell, that's okay. Pullback, you sell, that's okay. So if you want to sell this too bad, you need a pullback before you can sell it. But as it gets closer towards the low, which is over here, where the word demand is, it's not a good idea to be selling once you get at the bottom, right? You always buy low, you sell high. You buy cheap, you sell expensive, right? So the dollar yen, the potential is upside. So what if this just plunge through, right? What if it plunge through? Well, if it plunge through, then we will have to rethink again how far this wave is going to go. If it pulls back, then yes, you're going to sell again. What if it plunge through, suddenly it goes up, it goes down like that, then it pull down, then this is going to be upside because this whole action suggests the upside, right? So right now you're still looking for the buy as it gets closer. Right now you don't have a confirmation for upside yet because the whole thing, see, it's still down, right? So you don't want to take the buy. You don't want to take the sell so close to the bottom, so close to here, right? If it pulls back here, yeah, you could consider again here. Then you could consider it down, right? So all 6 charts are good. Sometimes you get lucky, you know, all charts exactly as it's drawn. So this one, it's supposed to go up and come down. So here it went up, then it came back down. Not exactly to this point, actually, to break this low. The idea for this actually was supposed to come here, it's supposed to go up here, not breaking this high, and then it's supposed to come and break this low. So it's supposed to do something like 1, 2, 3, and then 1, and then this one. 1 and 3 up there, like this. Right? So this one actually did 1, 2, 3 this way, actually. All right. And so what I see this one is potentially, I see this potentially being like this. A very, what they call something contracting. This could be a B wave. Because this looks pretty strong. All right. And I think this one is actually a wave. It's going to retrace here, and then it's going to go back up again. All right. So it's going to be like this up like that. I did sell this, right? But it's more a reaction trade. When it comes down here, I'm going to exit. I'm not going to keep this too long because I want to see if this is going to go back up. That's what I'll be interested in. All right. So that's just how wave structures are. Sometimes you get in the general direction, right? But it broke the top, then it came down here, but it did not go lower than as low as I thought it would. Right. So this was a tricky trade. General direction was correct. General direction was correct, but just execution, experience would have been needed to actually profit from this trade. The upside was easier because you took the buy, you broke the top. You only thought it would get to around here. Yeah. See this? I thought it would come out here, but it went higher. So that was okay. But if you had been in the sell, if you had kept this, well, either you'd be stopped out right here, or this was supposed to keep going, but it didn't. You get stopped out. It came down, and probably I would not have entered anymore because they were already too low the low. That's the thing. Then this started to happen. So this suggests upside. This started to happen. This suggests upside again. All right. So sell would have been difficult. This buy would have been easy. This buy would have been easy. The buy would have been easier, I would say, if the buy had been over here, something like that. Then here is where you try to enter. Then there would be easy buy. Or it had come to around this level, this would be easy buy also. So the forecast was easy to see, but the entry would not have been so clear cut. Yeah. So look at Euro Yen, right? So we're just going one by one. Euro Yen. So on break, it's supposed to sell. The idea was that it's supposed to be strong correction, one more move down. Well, it came down here, it pulled back, and that's why I've always said this is it's always not a bad idea when you are up, say, about this amount of profit, right? 1, 2, 3 like this. Not a bad idea to always take some money. If you don't want to take some money on the 5 minute, you'd probably be stopped out by now, right? And now you have to rethink on how to enter again. You have to rethink on how to enter again. Maybe you consolidate here, you try again. Right, or your stop would have been over here and you're still in the trade, so maybe you are having a stop loss right here, and what was once profitable, right, is now in drawdown right here, and you have to take that loss if you had not taken profit here. Yeah, so this is where this is the execution phase. Some people would, keep it, come here again, then they start to trail because they want to see if this one actually break, and when it never broke and it started to move back up, maybe you got stopped out here. Instead of keeping a stop loss, they move it down over here. Because the second time it's supposed to come down, it's supposed to whack through, but it didn't whack through, you see? See, so it didn't whack through. It's supposed to whack through, but it did not do that. Therefore, when it does this, you need to be careful. Maybe it's doing that. Maybe it's 1, 2, 3 here, then down. So here you can try to enter again. So if a person, however, did not try to did not move his stops in any way to defend his position entry when it was coming down, well, then his stops will still have been here. Right? But structure has not changed yet. You cannot say this is going to go up because you're so sure, you put 100 lots, you think it's going to go up. Right? Then you took a buy here, your stop will be right here. It has to be right here because you believe it's going to go up. Right? could it do that? Maybe, but it's 50-50 and I don't like to play things that are like 50-50. So to me, this one looks strong. I like this, right? Like this. This one could come up to around this level. From here, you want to watch this level, zones like that, yeah? You want to see whether it comes down because the downside is still low school on the euro yen to me. Until I think different because this one is important. I cannot not notice him basically. Well, what will be wrong? Well, if somehow it crawls and breaks this top, something is wrong. Then this would be that, right? And then this is up. So if it crawls like that, so even Ichimoku start to show you some sideways. Maybe the cloud will be over here, up here. You buy basically. So it's just a lot of waiting right now. Okay, for euro yen. This was pretty much on point also. The only thing difficult was execution. So basically, what I was thinking at the time was, look, from here, this is the demand zone. Now, price action was here. It could get up here, or it could drop before it goes up there. Which way we have gone depend on the banks, right? They're the ones with all the power. So let's have a look at that again, right? So you see, price action was over here. And that's when I started to map out what I think it could do. From here, already I was seeing around 5th December what was going to happen. Price action ultimately had to come to this zone here, right? The question is, after it goes up to the supply, how is it going to come into the demand, right? Something that I cannot see, but the rough direction I can kind of see in my head. It's just like chess, you play against an opponent, you see how it moves, and then you just try to counter attack basically. So I just kind of see this is what it's going to do, up and then at least down and then up again. And you just try to play accordingly. So when you press the play button, basically, if it come to the low here, I want to buy the demand zone. You see here, demand, and after it goes up to around this zone, what do I want to do? I have this box over here. What do I want to do here? I want to sell. So depending on what I get, if I get this, I will buy. If I go to the top, I will sell. No, I don't care what you do. It's like, if you come at me with your left hand, then I will try to block with my left and counter attack with my right hand. If you swing a punch at me with your right hand, then I'll block with my right hand. At the same time, I'll counter attack with my left. It depends on what you do, and then I'll react accordingly, right? So the idea is that it gets to the top, it's supposed to sell. Sell. Here you're going to get worried. You broke through, you went to the demand zone. And once you are at the demand zone, what are you supposed to do? Do you still sell? No. Then you are looking for at the demand zone, what do? You look for the buy. So you look for the buy. So basically, once you're at the demand zone, you're supposed to be looking for buys, to come and, as you can see, you see this arrow? You look, right, when you're at the supply, you look to sell. When you're at demand, you look to buy. At least to break this top. It could go even higher actually. I think it could, at some point, I think this price action is going to get up to this level. But that's not wave theory. That's based off zone theory. But anyway, the point is, these zones, knowing where demand and supply is an important thing. Okay, wave theory, supply demand zones, and the other one would be the idea of harmonics. I mean, they have a part to play with each other. It's very, very lovely to see them all come together. So 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 out of 9. Forecast pretty much on point so far. Okay, that's it. I might do more charts this week, and then next week going to review and see how many of them I got wrong or correct. All right, thanks a lot. Take care.